I'm Ashton from the Crypto Coin Show, and today on Blockchain Interviews with Alan Orwick, co-founder of Quai Network. Alan, welcome to the show, and thank you for taking the time.
Yeah, thank you for having me on, Ashton. Excited to talk about Quai and what we've been up to.
Definitely. I'm very interested in proof of work chains that are focused on growing the economy in a sustainable way, the energy dollar, as you explained it earlier as well. Excited to dive into all of that. I would love to start off our conversation with a high level on what you and your team have been building at Quai and why you're building it, and then we can dive into all the details.
Yeah, so fundamentally at Quai Network, we're building a scalable and programmable proof of work blockchain. So something that can achieve Visa-like level of throughput so that people can actually use blockchain technology day in, day out. And we want people to facilitate on-chain transactions, be brought in to this decentralized finance world and not succumb to off-chain or solutions that tend towards centralization. So we believe in that original Bitcoin ethos, the cypherpunk narratives and trends, and we really see a future in which blockchain technology will continue to absorb and eat the share of the value in the world, and it's only going to continue to go that way as a trend. For Quai Network in particular, it is a newly architectured, or it's a new architecture, and it is a way of designing a blockchain that has both horizontal and vertical scaling, so increasing the throughput of the actual blockchain technology in a truly decentralized way, with a crypto native energy dollar that has its price reflective to the cost of electricity through proof of work mining on the blockchain. So this is something that is kind of first of its kind in terms of experimenting with the means of proof of work as a useful tool for stability. And we're excited to bring that into market as we head into mainnet.
It's very cool, and I would love to dive into all those intricacies. I feel like Bitcoin is a great, not direct comparison, but like comparison to, so to say, that it's a proof of work chain. It has been around the longest, and obviously it has a strong network, and it has its own purpose. Quai does not serve that exact same purpose. You're not trying to take over Bitcoin. There's other solutions there, and there are problems to note with Bitcoin in the fact that it's not really cheap. It doesn't have very high throughput, although it's a great chain. If you're looking for everyday use and getting other people involved in a decentralized way, there are solutions to be had, which I'm guessing Quai is more suitable for everyday kind of transactions.
Yeah. So our goal is definitely to target the payments infrastructure space. We see stablecoins as an emerging use case and really almost the Achilles heel of crypto because they bring centralized solutions back onto these decentralized blockchains. And stablecoins right now are amassing $200 billion in market cap. They're taking over at least 10% of the total crypto market cap, and they're replicating what is essentially traditional finance on decentralized finance and on decentralized rails. Bitcoin is a close comparison. It is proof of work. There are many pros to Bitcoin that with Quai we're not able to quite get to yet. It is the most well-established cryptocurrency. It is the largest in terms of institutional adoption, and it has been around for decades. So right now, Quai is in its infancy relative to Bitcoin. And it almost feels a little dirty, coming on this show and having co-founder of Quai Network whenever we're aiming to have these decentralized systems that exist without individual figureheads. So I definitely look forward to a future in which I can go more hands-off and take part in the ecosystem and get to a point that Quai operates on its own. We see some of that in Testnet today. So we are in an active testnet, and there have been times where it's difficult to coordinate miners across a testnet, and it's hard to bring in all of the people to get buy-in on upgrades or different things that we're testing. So for that to sort of play out in real time is cool to see as someone that's been working on the project. But again, it's still a long road ahead and a long journey. And I think you're absolutely right in terms of Bitcoin being a close comparison. But I think too, the cryptocurrency space has evolved so much, and we're seeing competitors like Ethereum, Solana, Avalanche, Ripple, Cardano, and so many others. And the layer one space is difficult to differentiate between. So what we're attempting to do, again, with that energy dollar is something that does set us apart. And also from a fundamental architecture in terms of how we accomplish scalability while maintaining that decentralization through a wide network of miners.
Mm-hmm. Yeah, no, it's definitely worth noting that when you have a blockchain in more of its infancy, it's hard to go purely decentralized and have a one person, one vote. And it's hard to agree on the future of the vision of where a blockchain should go without some kind of help at the beginning. But I'm sure that DAO kind of governance gets put in place and builds as the vision comes to an agreement between the community members. And with that, the nodes you mentioned, and actually the governance and the decentralization of the network. Decentralization is important to have a truly decentralized network. Can you talk a little bit about how that works? And you mentioned that it's proof of work. Obviously, Bitcoin is also proof of work. Is there similarities there, and what's different?
Yeah, so fundamentally, our team sees proof of work as the only way of accomplishing decentralization at scale. And the unique perspective of separating token holders and the actual network operations is something that Satoshi was very keen on, and something that gives Bitcoin an edge. People think proof of work isn't sexy anymore. I tend to disagree. Bitcoin is still 60+% of the market, and proof of work is still being represented as crypto writ large. So we're seeing that it's something that provides tangible benefits to a blockchain. And in terms of governance, it's a way that you can, again, separate those token holders from the people that actually run the code and operate the network. And in terms of operating that network, when we talk about miners, where Quai separates from Bitcoin is that Bitcoin, it has a ASIC hash function. So SHA-256 has ASIC machines for it, and that gives Bitcoin a lock-in in terms of its hardware. And we've seen the mining farms all amass this type of hardware for everything produced by Bitmain and others. But with Quai Network, we are a GPU mined algorithm. So closer to original Ethereum, we've actually implemented a ProgPow algorithm that gives better efficiency to anything that looks like a GPU or has the memory available for GPU operations. So that actually pairs nicely from our perspective in terms of the compute economy, or what we deem as things that are aligned around sort of that flex ability to process different types of jobs and run different types of applications. So we have several partners in that space, such as IONET, Vast AI, Chlor AI, and these are more of these decentralized GPU clusters that can have this on and off peak interchange with mining Quai Network or running AI and doing other types of applications whenever developers request that type of job. So we see that playing more nicely. There's also other benefits in terms of decentralization for GPUs, such as the ability to sort of see it during import and exports. Like whenever China banned Bitcoin, there was a ton of sort of outflows of Bitcoin hardware, and people were able to sort of see that that was for Bitcoin because it was a SHA-256 ASIC and either destroy it or repurpose it for different parts. With GPUs, that's a little harder, so it gives a better resiliency to the actual network, but it also has a sort of less of a moat compared to everyone having ASICs in the market. So definitely lots of trade-offs. We see the barrier to entry is also lower with GPUs. So the fact that I can go buy NVIDIA 3070 or 4090 for $500 to $700, that's a better entry to the market than a $10,000 ASIC for Bitcoin, or some that even go up to $30,000.
Yeah, it's an interesting discussion on how decentralized the Bitcoin network is, but the barriers to entry to start mining it are quite high. The competitiveness and the price point of the competing with giant warehouses of
yeah, well, they have razor thin margins. So Bitcoin mining is a very, very difficult business, and anything, Bitcoin miners have gotten to the point in which they're more so energy sourcers and energy providers. And now that they're having to make deals and they're looking at things like AI compute and other types of GPU warehousing, well, it's difficult if you just have a bunch of SHA-256 ASICs and a bunch of Bitcoin ASICs, because you have all of this sort of sunk capital directly into Bitcoin, and you've kind of made your bet in that regard. So it's going to be interesting to see how Bitcoin miners perform. I still think the ones that will continually pivot into AI and then use that energy that they're sourcing in different ways is going to be keeping them competitive. We see a lot of that in Texas. We're based out of Austin, so we see a lot of the different miners out of Dallas or Midland and Odessa that are traditionally on oil wells and tap into the flared gas mitigation, that are sort of looking at different ways to monetize their energy production. And Bitcoin, I think, is becoming a smaller portion of that compared to all these other options available.
Definitely. And I want to jump back into the currency itself and the payments and getting that value of being able to actually make payments quickly, cheaply, in a decentralized way. You mentioned about the stable coin and how that currency is of utmost importance when you're making payments. Can you talk about how exactly that works on Quai Network?
Yeah. So I think payments is still one of the largest areas for disruption in crypto as a whole. And the fees we see on traditional credit card payments and processors, 2.5% interchange fees is ridiculous. And that needs to get disrupted in many forms. And Bitcoin, again, talking about that, has failed from a Lightning perspective. Block times on Bitcoin are too slow at 10 minutes on average. And we've still seen newer competitors in this space like Solana that have very, very fast block times, but they still, again, are trending to mostly using the stablecoins like USDT and USDC, which is great for places that want to dollarize, because you have a place like Venezuela or Turkey, Argentina, they can say, all right, I can get USDT, USDC, and I can go to a bodega and I can buy my lunch for the day. And they'll take that, or I can hail a cab and they'll take that. And we actually see a lot of that activity occurring on Tron. So in terms of the stablecoin adoption and where payments are heading, I still think that's $1 trillion opportunity for people that want to do traditional stablecoins. In that market as well, we see an area that says, well, if we were to take away fiat, and we were to take away all the different things that fiat does to a blockchain in terms of centralized control, having the ability to influence this externally to the blockchain, and then also sort of creating this diverse incentive and scheme in which fiat is almost polluting these blockchains, then what do we actually care about from a stability standpoint? And we've seen in many other cases that energy is actually a relatively good source of stability. And in proof of work systems, we have that reference already available to us through the difficulty and through the overall hash rate in the system. And so by oracleizing that hash rate through that global set of miners, we can emit a token proportionally to the hash rate that we call Qi, or QI. And this Qi token acts as a stablecoin alternative. It's not perfectly stable, and that's by design, because if you were to create this realm of stablecoins, then there's no way of tying them to, say, a dollar, because the dollar doesn't exist in terms of what this blockchain is viewing. So that's by design, because we want that to be maximally decentralized. And the more you influence these reference points in terms of what $1 is or what €1 is, it pollutes that. And we see over the long term that this concept of stability from an energy perspective pairs well in many different cases. The first being RWAs. So RWAs introduce ways of trading things like commodities, gold, copper, oil, silver on chain. And if you were to pair them against something tied to energy, well, that opens up unique Forex markets, and people would potentially prefer to settle contracts in an energy denomination than something like a dollar, especially if they're longer term contracts. The second being payments. So again, highlighting this case in which consumers over time want a more relatively stable form of purchasing power. And if you were to say, well, what's an alternative to the dollar, alternative to the euro, or different types of currencies? Well, energy as a whole is a useful basket. And that's something that over time, if supply chains kind of move and flow and have different means of sourcing energy, then my purchasing power will maintain relatively stable compared to energy. And then the third being AI agents in this area in terms of compute and sourcing that. When I talked about some of the partners we have before, well, AI also doesn't really have a sort of perception or an understanding of fiat, because again, it lives in this digitally native world. And so if you were to tell it that its currency is tied to energy, well, it can understand how many watts it's consuming, how long it's running. It's computationally sort of intensive tasks that have a better basis and a better unit of account as it relates to that AI agent. So we see sort of that intersection of those three categories really unique for this concept of an energy dollar. And of course, that's not to say all of the other things that Quai does from a just monetary system perspective with Quai as an asset, but that's kind of the area that we're exploring.
It's very cool, because I've seen many different stable coins try to have different algorithms and different backings over the years. And I really haven't seen one that is more energy focused. And I feel like this should have been more common sense, that they should have come up with this earlier, especially because the energy is so important in Bitcoin, having, that the mining of it and energy, and sort of the misconception as well that people think that, it's taking up all this energy, when actually there can be a surplus of energy. It can provide energy to the world. But having the coins back
in Bitcoin's defense, right? Many people have considered Bitcoin already carbon negative, because the way in which it uses and consumes different types of electricity. So, we're not looking to go and completely dethrone Bitcoin. We want to exist, and we see that all the different types of solutions in blockchain are potentially useful to explore. But yeah, to Bitcoin's defense, right? It has hasn't destroyed the planet yet. Many people were chanting for its death, in 2017, 2018, and they said it's going to burn the world down. And if anything, it's just reinforced a lot of our energy infrastructure and has made it more reliable for people to go and tap into this network.
Mm-hmm. So do you think that having a stable coin backed by energy will be more stable than a fiat-backed, or just more practical? Or what are the benefits over something traditional like USDC, USDT?
Yeah, I mean, so it depends on your reference point, right? And if your reference point is a dollar, then obviously it will never match a dollar, because your price parity to a dollar will always be $1 that's issued. And one of the things that really inspired us too is just, again, that concept of decentralization, because we were looking at a time in the market whenever USDC depegged, whenever SVB collapsed, and then ultimately the Fed had to come in and we sort of socialized all of the losses that were attributed to many different banks failing during a sort of crypto catastrophe. And that inspired us to rethink what stablecoins really are and how they are transacting on chain. So to come in and say, this is going to be perfectly stable, well, that's not correct. We want to create something that is truly decentralized, has a relatively good basis for stability, and is a better foundation long-term.
Mm-hmm. Yeah, I think it's important to note, and even with the stable coins that are popular, they're fiat-backed, are they really stable when there's inflation and $1 is equaling one fiat dollar, but that's not really worth what it was a few years ago?
Yeah, and obviously we're very fortunate for the people that transact in things like the US dollar, because it is the sort of global hedge money, and it will remain that way for a very long time. And we see currencies come and go, and we don't know the sort of time frame of the US dollar, but ultimately we do see a lot of the geopolitical influence in the US with our rising debt, and then all of the different problems that we kind of have. We've extended our supremacy rather far and wide. And when you look at cracks that are beginning to form from a US dollar perspective, well, there's sort of pause and there's reason for concern, which is why I think they're starting to bring in all these different cases. Like, we got to back the dollar with Bitcoin. We got to create a strategic reserve. We have to explore these different options, because there is, fear in which BRICS goes and says, well, we don't want to use the US dollar. So then we have to put tariffs on them and do all these different means to ensure that they maintain power for the US dollar. And again, that's just sort of the way in which control is exerted through a currency. And as long as there's a centralized group of people that can influence a currency and exert that control, then people will suffer at that sort of the behests of those consequences. So for us to explore something that's not tied to fiat as a means of stability, is actually more of a underlying current in the economy and is an underlying input and output to what people do every day. That's kind of where we get to the point of energy. And we're actually not the first people to explore this. There's actually a lot of other sort of thinkers, great thinkers of our time, like Thomas Edison, Buckminster Fuller, Henry Ford, and people that have thought about creating a currency around energy. And ultimately, they didn't really have the tools to do it, because how do you just go and issue this currency? There has to be, before blockchain, there had to be a manual person issuing currency. But now with blockchain technology, we can create these forms of currency that aren't issued by people and issued by machines. And in terms of creating this energy dollar on Quai Network through the Qi asset, well, this is the first time we've explored it with tying that to energy.
Yeah, no, it's amazing what blockchain can do in enabling not having a centralized point of somebody has to print this from some building. So it's very exciting. And now with the practicality of making a coin that great, it's set up in an energy efficient way. It's an energy dollar. It's not backed by fiat, but the actual usability of it, the user experience, there's a lack of crypto payments right now, not just because of Bitcoin having a few dollars of cost, it's hard to buy your coffee, but because of the wallets or the practicality of it. How can Quai sort of solve some of those problems, making it easy to send remittances or to pay for a coffee and people to actually use it?
Yeah, so I think first off, we've definitely been sort of in a chokehold from a crypto usability standpoint. We have MetaMask as like our main thing that everyone uses, and now really we've tried to put as much as we can into that system, and web wallets are sort of what everyone's familiar with. We see a mobile first approach as being one of the ways we can lead in this area. So we actually have several applications that we are launching that can get people directly using this energy dollar on their phone and on a mobile wallet that is pretty seamless and pretty easy to use. We want this to look like Venmo in terms of being able to get an account, send money, and have it transact with a way that you have a contact and I have a trusted name and association with that address. And ultimately too, extending that, making it even easier than Venmo, because Venmo still has friction in terms of getting deplatformed and limits and ways in which that is controlled by that single entity. So we've pushed, in many cases, a way of getting more developers to create solutions. So being open source and the ability for people to take what we've built and try different solutions and find different types of user experiences that benefit them, and then also localizing that. So having many different languages that are available and having that seamless and easy to use from a mobile perspective. And then beyond that, I think just the way in which that crypto today is just kind of normalized and making sure that people are familiar with how crypto actually operates, the concept of seed phrases, the concept of private keys, what those mean. Abstracting those, of course, is important, but we still want people to realize that they are having the sovereign approach to how they store their funds and how they store their assets, because if they don't, then bad things happen. If you kind of put people in a situation where they're not really sure of what's going on or they don't really know where things are, then it's difficult. And again, that's kind of the cost of this type of asset and this type of industry, but we want to ease that as much as possible.
Mm-hmm. That's good. I'm looking forward to seeing some more adoption in crypto payments. So wishing the best for you guys on that. And
Yeah.
now, where you guys are at with it right now, you mentioned there's a testnet. What exactly can people do to get involved with that, and what's the current state of this?
Yeah, great questions. So we've been in testnet for some time, and we're in our final testnet that is going to end January 8th. And right now, you can spin up a Quai node, so you can run a participant, a node that joins Quai Network and then helps validate the blockchain. You can mine with this, given we are proof of work. So if you have GPUs that are laying around, feel free to contribute that hash rate to Quai. We've seen close to 42,000 GPUs come and mine Quai Network during this testnet, and we've seen 2,200 nodes, so different participants that have joined and taken part. We've seen 34,000 addresses, so pretty active in terms of user engagement. A lot of these are actually occurring on mobile, and we've seen great success in different types of applications that have been built from a developer perspective, Telegram games, NFT collections, tokens that have been launched, decentralized DEXs, decentralized exchanges, and different types of just ways that people are developing on Quai. So we're definitely excited about the ecosystem that's emerging. We want people tapped in to this type of economy in terms of centering it around thermoeconomics, centering it around this concept of an energy dollar, building out a truly decentralized monetary system that can go and compete with the likes of Bitcoin and also compete with other systems that, quite frankly, have ossified over time and are still falling behind from what the users expect and what they demand. So we see, again, while for us, it's a matter of getting to mainnet, finishing out this testnet strong, and getting more people aware of Quai and having them see that this is a viable opportunity for the future.
It's very cool, Alan. I'm excited to see more on the growth of the energy dollar and proper blockchain payments that people actually use and they prefer over the dirty credit card fees or other fiat money. So I'm wishing you and your team the best on it. I'm going to check out the testnet before January 8th. I'm going to leave a link to it in the show notes below as well for people to check it out. I'm wishing all the best with the move towards the mainnet launch and the Qi token. And I would love to follow up in the near future.
Yeah, let's do it. Ashton, thank you for having me on, man. Excited to keep in touch, and thank you for the time today.